This is episode 1164.
We, as a business, because we focus on the SMB, and one of their main points is working capital. So we spend a lot of time trying to think about what are the different problems a small or medium-sized business has when it comes to working capital, and how can we help alleviate those problems. A lot of our customers, they work on projects, right? So they're traveling, doing a couple weeks here or a couple months here, and it usually takes them a week or two to receive kind of their own revenue. So we've, over the last several years, offered working capital lines to our customers, allow them to have 1 to 2 weeks of float, if you will, on their travel expenses to alleviate that working capital mismatch. And that's been very successful. Over 65% of our customers attach that product, which has been a great signal for us because it's helped inform our product roadmap on what else can we offer to the SMB customer that will alleviate some of their pain, make them more sticky, and make them more happy.
Before we begin, I want you to consider something. It's one thing to evaluate CFOs from a board seat. It's another to become one. Today's guest made that leap. After years spent assessing leadership teams, underwriting growth, and allocating capital from the investor side of the table, he chose to step inside the arena. The shift alone raises a compelling question. What changes when the pattern recognizer becomes the operator? In this conversation, we explore what it means to move from advising strategy to owning it, where capital allocation becomes daily discipline, where customer signal shapes financial focus, and where the CFO must be fluent, not just in numbers, but in business momentum. If you've ever wondered how an investor thinks once they're in the CFO chair, you'll want to listen closely. Our talk with CFO Alex Melamud begins after this. Hello, CFO Alex Melamud is with us. After years as a technology investor evaluating companies from the outside, Alex made a rare move, stepping into the CFO suite for the first time. What prompted the shift? Conviction in Engine's leadership, we're told, the business model and the growth potential. Alex, welcome.
Thank you, Jack. Honored to be here.
So, Alex, I emphasize that investor upbringing. Would you look at it differently, or share with us some of your background and how you might look at it a little differently if you're not this investor as I described?
Sure. I bet it's a bit unorthodox given some of the other folks that you've had on the podcast. I started from the investment banking route back 20 years ago. Joined a firm called Lehman Brothers, if the folks on the podcast remember that one. And that was a fantastic entry into what I call more professional services orientation, right? We were the beneficiaries of a lot of business momentum back in 06, 07, and then trickulated into private equity. And what really drove me there for the first 10 years of the 16-year career was the firm I moved over to was TA Associates. And back in 2008, 2009, you didn't have really LinkedIn or the tools that we have now to prospect, to source opportunities. And it was very entrepreneurial. You were essentially plopped down into the business and said, hey, we're looking to find growth stage founder-owned businesses and help support them and help them grow. And that was kind of the background you're given. And so you really had to research, develop a thesis, and really test that thesis quickly and get signal back. And then you'd have to sell yourself and the firm, because that was the product. That was probably the first learning. I realized that even as an investor, I would always make the comment that we're in some ways, sales folks. We're selling the product of private equity, and that kind of stayed with me throughout my career, as always understanding that first and foremost, I am selling the product or the service of the organization that I'm a part of. And that shaped my thinking as I later grew on to move on to a different firm, Permira, which is very product focused. But again, there we're building a team, and what attracted me to that opportunity was it was an international buyout firm that wanted to do more growth investing in the US. And their focus was a lot more product centric investing. How do we find the disruptors or the evangelizers in the product? So again, it was taking that more entrepreneurial lens, from TA, and then bringing it to Permira and thinking about, okay, how do we build a team to sell a new product, into this market? And again, it was more building. So while I guess you can call me an investor, I had the unique opportunity to sit on a dozen boards as an observer or director. At the core, what attracted me to each of these opportunities and ultimately Engine was a mix of building and being an entrepreneur and just learning a new skill set.
Again, along the way, as you just described, you must have met dozens of CFOs. And I'm wondering what what you feel differentiated the stronger ones. What was the characteristics of the really optimal CFOs for you back then?
Yes, it's changed over time because I think the CFO role also changed dramatically. And in the last 20 years, initially I was more of corporate governance, accounting, and now the CFO has evolved to be much more strategic executive and business partner to the CEO. And I think over time, the unique vantage point of kind of seeing that transformation and that growth, ultimately, I think it came down to just business fluency. The best CFOs, you would forget that they're a CFO when you're talking to them. They'd be talking like someone from product or from sales or operations. They understood the different levers of the business, and they also understood the incrementality once those levers were flexed. And on the investing side, that's one of the key core tenets when you're looking to underwrite and or diligence of business is you typically have a strong CEO founder that has a vision and that is driving the organization. Really, the organization is trying to keep up with the founder most of the time. But when you see a CFO that is at that similar pace and is able to take a fair bit off the CEO's plate and really be that executive first and maybe CFO second, that is what we've seen, especially on the board side, because the board and the CFO speak probably sometimes more than the board and the CEO. And having that credibility, that fluency, and ultimately that trust and that influence, I think differentiates some of the best CFOs that I've had the honor to work with.
You just mentioned something that's kind of interesting, that sometimes it's the CFO who communicates more to the board than the CEO. But the other thing you've gotten to observe over the trajectory of your career there, the relationship between the CEO and the CFO, you see the chemistry. Sometimes you see the the lack of functioning relationship, I suppose. But can you reflect a little bit on that for us? I mean, you said you saw these CFOs who are able to discuss and talk about anything.
Absolutely, and I think it's definitely something that I look to replicate in my current role and drove a lot of my thinking and my decision. But from the investor side, what I observed, I think many investors observe, is the CEO role is actually very lonely, because you are seen as not being infallible, but the weight of your decisions are immense. And so it's very hard for a CEO to show as much vulnerability as one probably could and would like to have. And so then having that CFO that has that trust with the CEO, I think allows for some of that vulnerability to come out from the CEO to really debate back and forth without judgment of where you can go, not needing to sound like you have all the answers, which I think some folks believe the CEO needs to have, and the CEO also believes that, so that when they're interacting with their investors, they might sometimes hold back on things and not not truly openly debate and discuss, to not question if their vision is correct, their trade-offs are correct. But I think that's where a CFO can come in. And given where the CFO sits and being sometimes closer to the data and how that data turns into value, and being a trusted partner to the CEO, providing that data, providing the other opinion, and not always having to push an opinion, but in many ways inform. And I think that also creates a special relationship when the CFO has conviction, has rationale, something we say a lot at Engine, but also then is able to disagree and commit. And I think that is what also reinforces a much tighter relationship, because you're mission first. That's how we think about it at Engine, and you're both looking at the same direction, and then ultimately come together on what is going to help accelerate the business to get there.
Now, we want to ask you about Engine and learn some more about the company. But before we do, I do want to understand better. You could have come over to the operations side sooner. Why now? And I'm sure there were boards that kind of try to encourage you. We could use you on a team, a leadership team sooner than this. And anyway, what kept you on the sidelines, and what finally led you to step into the office?
The honest truth, I think it was serendipitous. But maybe to peel that up a bit. On one side, being on the private equity side, it's an enormous learning opportunity. The 16 years there, I was very fortunate to continue learning about different spaces, different business models, interacting with a number of management teams and founders. They're just exceptional. And so having that exposure, that dynamic exposure, something new every day, every month, every year, is very captivating. So I think that keeps a lot of folks invested and committed to that role into industry. I think when it came to Engine, I had just a unique situation of being able to lead the last round 18 months ago, sit on the board, meet the team, and see how our diligence, our underwriting model plays out, and then really see more of the levers that can be pulled, that can be accelerated. And there was a point in time where I was asked by our founder Eli to help work on the CFO search. So it was that combination of factors where I kind of looked over him one day and said, well, what if I joined you as CFO? And I think he was taken aback, because I think if anyone who knew me at the time, they didn't see me leaving the industry after spending 16 years there, building a career, building a team, having a portfolio. But it was a combination of the last 16 years of, frankly, pattern recognition and learnings for me to see that I haven't come across a business with such a large opportunity, such a large TAM, if you will, vis-a-vis such limited competition in the SMB space where we play, which we can get into later. But at the macro level, that was truly it. It was the opportunity is so large, and it is not the capture of that opportunity is going to be based on our execution as a team, as a business, and being able to play a vital role, a significant role in that journey seemed too hard to pass up. And at the micro level, the team, the culture, the founder who I'm choosing to leave a career for, to work for, is something that I had no second guesses about.
For the audience who might be some unfamiliar with Engine, let's find out about this company today. And what are the offerings, and what made you take the leap? Let's find out. Tell us about Engine.
Yeah, sure. Engine, in a nutshell, is a modern business and group travel platform. So on our platform, you can book, manage, and pay for your travel. We save time and money. Those are core value props of the business. We have an extensive network of pretty much every airline, hotel, and rental car company in the US. And so it's as easy as going to hotels.com, if you will, to book on Engine. The kind of unique differentiation of kind of where we play is we focus on the SMB. So if you look at the last 30 years of corporate travel management technology, it's been very focused on the enterprise. We've had Concur in the late 90s. You've had Amex GBT about 5 years ago. And then you've had Navan recently go public. So those are kind of the three large corporate travel software platforms that existed. But the businesses in the sub 1,000, sub 500 employee range, those businesses never had a focused technology or platform to go to. They were going to more of the OTAs and booking like consumer. When they book like consumer, they're very transactional experience. They don't get access to proprietary corporate rates. They don't get access to a number of fintech tools that we offer, less visibility. And so while the savings I think are fantastic, we save over 26% on an average hotel room. I think it's actually the time that the travel coordinators, the founders, sometimes it's folks in finance, they have to manage all the travel for the businesses that we work with. It's an enormous amount of time to really wrangle all the cats, get all the expenses, make sure it's all within policy. And also then on the traveler side, the employee, they're waiting for their expense report to get cleared because they're out $500-$600. And all that noise and complexity, that's what we're on a mission to solve. We say we're looking to power connection through simplified travel, make travel less work. And so that's what our company's about.
So as CFO, explain to us where are you most focused right now? I mean, is it growth acceleration? Is it margin discipline, capital efficiency, or is it something else?
Yeah. Oh, I would say it's all of them depending on the day and how we want to win. We're a pretty high growth company. We exited January growing 60% year on year. We're over 1,000 people now, and we think the opportunity is quite large, given in our market. Just to give you a little picture of our TAM, corporate travel and expense is about a $1.6 trillion global market. A quarter of that, 25%, is focused on SMBs. However, SMBs, 2/3 of SMBs are unmanaged. And what that means is they don't use a platform like Engine to manage their travel. And so that the white space is very large. So for us, it's much more focused on allocating the next dollar in the highest ROI manner as possible. So incrementality is kind of what we're focused on ultimately. For me, as I'm in the business and kind of getting all the telemetry in place to maybe bring more like the investor capital allocation into the business, it's a lot more around getting the data with the highest signal. We capture an enormous amount of signal. Over 30 million of hotel rooms have been booked on Engine. We have over 25,000 businesses. We've saved our customers over $270 million last year, and which is fantastic. But the question is now, which are the pockets where we can go deeper in and have more value to our customer base? Where can we then grow faster within that customer base? So trying to get to the micro level data and really investing a lot more in data science and AI automation, as many companies are doing right now, to really focus our time. So we're not spread as thin as we could be, because the SMB, as I mentioned, enormous space. I think sometimes that's why investors have avoided the SMB, because it's much harder to focus in the SMB given how large it is. Therefore, much harder to get attractive unit economics. So maybe the investor hat in me is still always thinking we should be always focused in a place where we're improving our unit economics. So how do we get there? What data do we need to have at our disposal to have the conviction to steer the ship one way or the other way?
So travel's experienced some volatility over the past several years.
Yeah.
And we're wondering how that has maybe reshaped Engine's approach to financial planning, scenario modeling. And as a new CFO, the whole financial planning experience is in front of you as well as 6 months behind you, I suppose.
Yeah, it's fascinating, actually, our space. So our customer, the SMB customer, is much more the frontline worker. And so I can go back to our diligence when I was at Premier and we're innovating the investment. A fascinating insight that we came across was the S&P, the frontline workers, think construction, manufacturing, transportation, and the like. In 21, 22, when we were at peak COVID, peak travel disruption,
Right.
and enterprise and mid-market firms really stopped traveling and started going on Zoom and other video conferencing tools. The SMB traveler, the travel actually did not fall off a cliff. It stayed very, very stable. And that was actually one of the reasons why we had an enormous level of excitement about the investment into Engine, is because how stable and steady that cohort is, because our customers need to travel to fulfill their revenue obligation. If they don't travel, they're going to go out of business. And in many ways, they're the essential worker. So we've seen actually pretty consistent stability over the last few years. And now, as the broader market is coming back and in-person events, connection strategies, customer offsites, executive offsites are becoming more and more frequent, we're seeing an increase in actually acceleration over the last few months in volume on our platform. And so when it comes to planning, to answer your question, it definitely is a much harder business to plan for than some of the businesses I invested in the past, which are more contract, recurring revenue model, 2 to 3 year duration. And you have that annuity, if you will. Our business model is very different. It's a take rate model. And so it's much more usage transactional based. So this is where the data becomes more and more critical for us to capture patterns earlier and earlier, by industry, by geography. So we've so far seen a tailwind, but constantly reevaluating cohorts to look at their behavior to understand if we're going to pick up any kind of signal that there is a travel headwind coming.
So what though then would be your top of mind metrics? What are those numbers or measurements that you're looking at before your first cup of coffee?
Yeah, we love our dashboards here, as I imagine many leaders do. That's the first one that may surprise you as a CFO that I look at is actually NPS. So at the end of the day, we focus on the customer. And if the customer is giving us positive signal, we know that we're moving in the right direction. So we have a Slack channel, where all of, our NPS surveys flow into. And so every executive can see which customer, when it was, what was the NPS, are there any comments? So I think lots of us obsess about that one. And then, the next one is around volume growth and bookings growth. We, as many companies, live in Slack, and we have a public channel for all of our employees to see where our volume is every day, every week, every month, and year to date. And so people can see how it compares in those durations, to see the momentum of the business, and frankly see just how their efforts are contributing to that momentum. And then we kind of drop down into our various different product lines and seeing what has the highest uptake and attach. We, as a business, we kind of touched on it earlier, because we focus on the SMB, and one of their main points is working capital. So we spend a lot of time trying to think about what are the different problems a small or medium-sized business has when it comes to working capital, and how can we help alleviate those problems. A lot of our customers, they work on projects, right? So they're traveling, doing a couple weeks here or a couple months here, and it usually takes them a week or two to receive kind of their own revenue. So we've, over the last several years, offered working capital lines to our customers, allow them to have 1 to 2 weeks of float, if you will, on their travel expenses, to alleviate that working capital mismatch. And that's been very successful. Over 65% of our customers attach that product, which has been a great signal for us because it's helped inform our product roadmap on what else can we offer to the SMB customer that will alleviate some of their pain, make them more sticky, and make them more happy.
Curious, now that you've been a CFO, and I think you arrived the middle of last year, I suppose. Tell us something about the role that you didn't expect, or where you spend your time in a certain area that maybe you hadn't expected to.
Yeah. Well, I'm definitely not part of central casting, so I find myself coming to speed, and it's been 7 months, and I've had the opportunity to be able to ask the basic question of why. Why do we do it this way? I think that's actually helped a lot, because there are folks that come in, from other experiences, and we all come in with, this is how things are done. Or this, I've seen it done this way a couple of times. So it makes sense to do it this way and, move forward, move on faster. I think I have maybe the unique optionality to really ask why a number of times, and it's in earnest, because I haven't, seen it done from this vantage point before. And I'll give you an example. I went through annual planning. It's the first time going through annual planning, right, as a CFO versus on the board, and quizzing the CFO and why this, why that, but really going down granular. And as for most companies, headcount is called around 2/3 of their expenses. So it's where the majority of the time is spent on really understanding, how many people we're going to have each department, and that kind of rolls up to the cost. And then you can have your marketing and your travel, but there's probably 25% of expenses that are non-headcount. Think of those as your software costs, different professional services, a lot of third-party costs. And I was frankly fascinated by just how large that bucket is, and putting that time, attention in, and going into, our top 50 costs that are non-headcount, by contract, by vendor. I think I was able to both learn a lot, on how we are dealing with third parties, and that just focus and inspection, helped those, relevant, respective individuals understand, oh wait, I should not be taking things as is. I should be really looking at every contract as a brand new relationship and how to optimize it. And so that's led us to see at least 10-15% and per unit cost savings going into the year. And that's tens of millions of dollars from our end. So just kind of having that time and attention, which I didn't appreciate that my inspection would frankly uncover, so much new opportunity. And then it would then trickle down to every individual who was, maybe in charge of that recruiter or in charge of that insurance contract, would go back to the drawing board and say, what if I did this from scratch? Would I, should we go bid this out, or should I really just change the terms? I think a lot of times there are things that have been put on status quo, and just that inspection, I think, has created a different level of hygiene, when it comes to those amount of costs, which are not the majority, but can move the needle for a company our size.
We want to quickly touch on AI with you, and I think you've touched on the customer experience a number of times already. So we're inclined to believe AI will be playing a role there as well for us. But what would you tell us?
Yeah, it's top of mind, I imagine, for every leader, for frankly every investor. It's exciting, and I think from our perspective, and I'll get to the tools that we use and we're experimenting with, but I actually think it comes down to talent. We spend a lot of time thinking about the talent that we bring into our organization, because we were looking for folks with a growth mindset and that experimentation philosophy. Because if we don't have the right folks who are thinking about it, open-minded and trying to do new things, trying to disrupt, we're really not going to have AI embedded and AI native in our company. So it comes with the talent, and then it comes with us as an executive team really beating that drum, to focus folks on it. And then as an organization, we're trying to actually measure ourselves. So our operations team has developed a scorecard for every department to figure out how well are they using AI as a way to try to be objective. Very few are passing right now, I would say, but think of it as we're looking at what's the usage in the organization today. What's the confidence of every individual user when they're using AI? Back to that growth versus fixed mindset. How many opportunities have been identified? The types of opportunities have been identified, and what's the process automation that said organization is taken through? So that's like one way where we're actually assessing ourselves, not just experimenting with a lot of tools. On the actual tool side, we've really leaned into Salesforce Agentforce. That platform has been able to unlock an incredible amount of value. We have Eva, the engine virtual assistant, that handles an enormous amount of interactions, and that CSAT now has actually sometimes surpassed live agents, believe it or not, which has been incredible for us, Philly, from an efficiency perspective and for customers because they're having better experience. On the productivity side, on the sales side, it's almost hours of savings per week. So if you think about lead qualification, lead prioritization, research and talking points for our AEs, we're measuring probably about 5 hours back a week, which is incredible. And then lastly, from the internal process, you just think of all the FAQs employees have in my organization on the accounting side. Think about equity comp, our own travel policies, our own kind of maybe vacation or healthcare or insurance policies. So we have a number of internal Slack bots that our employees can go in and have a conversation with and really get 90+% of their questions answered, which then saves the business time, and allows us to focus on more high value activities. So it's a combination of having more talent, experimenting, and then leaning into the things that worked. For us, it's been pretty transformational today.
How as you discover how to leverage AI to drive your business with different tools, you're thinking, well, how can we improve our tools to get our customers as excited as we are about these tools that we're using?
Oh, I see. Yeah. I think we're trying to infuse it more and more in our product from that perspective. And so there's a lot of personalization. There's a lot of smart Q&A that now our customers can use, where if they're booking a room and they want to ask, where's the closest gym? Or if I'm looking for a certain type of food, how close is that to the hotel? So we're exposing it that way to our customers. I think over time, there'll be more opportunities that once we have the right level of, call it, testing and confidence, that will bring them more around the journey. But right now, it's a lot to do with personalization, and service.
So just as far as the finance function is concerned, is there a piece of AI that the function itself has leveraged and you can see the impact, or maybe it's automation, I would assume?
Yeah, I would put more on the automation side. I'll give you two examples. One that we're seeing immediate value today, and one that we're working on, and we hope to see later this year. On the accounting side is where we've seen a fair bit of automation when it comes to more of the reconciling work at month-end close. So we've been able to shave off a day, maybe even coming to two, on really being able to close the books much faster, as now the systems are talking to each other. We use NetSuite and Adaptive, for instance, and that's saving hours and hours upon time per accountant at month-end close. So that's kind of in the works today. On the more finance side, we're using, I guess, AI has been used for a lot of things, using a lot of data science when it comes to daily pacing. And so historically, the business was, forecasted in quarters and years, and then down to months. But now we're starting to get pretty good fidelity on how customer behavior happen on a daily basis. And so I think we're working currently now on getting the right data science in place. but I think that will be an incredible unlock for finance teams when they're able to change the unit of measurement of time to daily or weekly, depending on how high velocity the business is. And the reason why I find that important is how I think about my role as CFO is our goal is to get insights to our business partners as fast as possible, to inform them and to suggest, certain trade-offs through the data we see. And so the faster we can incorporate the latest technology, latest automation, to extract those insights, right? Let's close the books, find the insights, propel them out to the business. I think the better of a job that we'll do as a finance team.
5 years from now, that's a long time, huh? But 5 years from now, what will look most different about the finance function in your mind? And you can speak broadly, not just about Engine, but.
Yeah, well, I would say, I think we'll have a lot more tools and a lot more rapid data analysis at our fingertips. I'm not sure finance teams are going to grow. I think they're become more, in some ways, specialized, but with much deeper insights. I think 5 years from now, I expect the technologies that we'll have out there will be essentially a team of analysts that you'll have. And so that in many ways, I think it's incumbent upon us as leaders right now to train the entire finance team to see the broader picture and not be specialized in a niche, because that'll allow them to leverage the technologies of the future. Because if I'm just doing a small part of go-to-market finance and not appreciating the bigger picture of how go-to-market, R&D, operations, expenses all linked together, I think I'm putting that role at risk long term. So as we think about bringing on new folks to our team, it's who's passionate about how finance can impact the business, and how can we rotate them through different specialties? Because in 5 years from now, having that broader view of the business and how finance can impact the business will be critical, I think, to leverage what's on to come.
That's what it's about. Well, thank you for that. We are up to what we like to refer to as our finance strategic moment question. And again, this is just might have happened anytime during your career, but it's a moment of insight that you experienced that allowed you to understand the strategic role finance plays in business. We keep it general like that to allow you to choose just whatever you'd like. But what do you have to share for us? What comes to mind when we ask for a finance strategic moment?
A lot of times when companies look to raise capital, some of them think about it maybe a year in advance, quarters in advance, but sometimes it is another task they have to get done, and they hire an investment bank to help prep them for this process. And the learning I've gone over the years, being on the investing side and pursuing businesses to become their investor, is how important building a long-term relationship is, because it offers a level of conviction and credibility that is very hard to replicate and very hard to do in a short period of time. And what I mean by that is, let's say you're a growth stage business, and you're looking to raise capital, whether it's a Series B, Series C, it doesn't matter. You're looking to bring in a partner that is going to be, it could be minority investor, it could be majority, but it's going to be a significant partner that you're going to care about. Meeting that partner, a quarter before you're looking to consummate transaction is something that I would really advise against. I would really try thinking about how do you meet and how do you develop conviction together at least 6 months, a year out. And the reason I say this is from the investing side, when us as deal doers go to the investment committee of our partners, who think of them as our chief investment officers, and we present an idea and we talk about all the work we've done and the relationship they have. One of those common questions is, okay, how long have you known Jack's business? How many times have you met with Jack? How consistent has Jack been when he's talked about the business? Typically when you've talked about the business, has Jack exceeded the forecast he gave you, or hit it just right, or do you miss it? Right? Is Jack a sandbagger or not? Is where they're going to, and so that is a lot of the investing side is a lot about trust, and ultimately partnering, because once the investment is made, the hard work starts then. And so having that conviction and credibility on the other side is critical. And from the operator side, from the founder or the CFO or the CEO side, who's looking to attract capital partners, I would encourage the same thing, is really understand who is going to provide long-term value. Because if you go back to what I said earlier, and if you believe it, that investors are similar to sales folks, right? They have capital, they're looking to put to work. The private equity industry has changed a lot in the last 20 years, but at the core, they're committed funds that are looking to put to work for a short period of time. So their goal is to put capital to work. And I think as an operator, as a CEO, CFO, your goal should be to realize who's focused more on delivering value over the length of that relationship, and meeting them over a year, seeing the ideas they bring to the table, seeing how much they pursue you and how much time they invest in you. I think it'll be critical as you think about the next 3 to 5 years of that relationship and how they act during that relationship. And I think that's informed me both when I was making investments, and now as I think about our future and how we use external capital to grow. It's informing me how I work with investing partners on the other side.
Wow, some great perspective for us. Thank you for that. We're going to enter what we like to refer to as the mentoring round, and it's interesting. I want to ask you about board appointments and seats, because so many CFOs out there, this is an area they sometimes struggle. They're not always the best networkers. They're not. Sometimes they're a little too busy, I think, to get to events or introduce themselves. What advice would you have? And let's just ask, what makes a strong board candidate? As someone who has had several appointments, what makes a strong board candidate?
Yeah. Early on in my career, one of the partners at one of my prior firms walked me through how he thinks there's several archetypes in board candidates, which I found interesting and directional. He said there's the friend, the one who is on the board, who's always going to be the kind of your first call, because they can give you advice, they can be comforting, accommodating. Then there's the expert. It's the individual who knows the space the deepest, the function the deepest, and will have an opinion, but is much more black and white. And then there is the helper. Their only goal is to figure out how to solution with you and problem solve. And they don't have an agenda. It's more for them, it's problem solving. And so out of those three, there are probably more archetypes, but those are the three that I remember that he shared with me. I've always leaned to the latter, to being the problem solver. And I think that a lot of times can maybe start as transactional, but it ultimately leads for a foundation of long-term partnership. When on the investing side, my goal is always to be the one, the first or second call on the board for any type of problem. I clearly would love to discuss the strategic issues, but like you said, the CFO sometimes is very busy, and there's a long list, and they're all important, but they all have to be somehow prioritized. And so I would say if I can help you with number 7 through 10, call me for 7 through 10. Let me just get that off your plate, because I ultimately will build more trust and more credibility in that relationship, and create a much more productive relationship. So that's how I think about maybe the archetypes of a board. The other piece I would put on board is the board should really match what the business is focused on becoming in the next 3 or 5 years. So if there's a need to really expand the marketing capabilities, I would urge the investors, the founders, to really think about bringing on someone with that background, because a lot of times, especially for private company boards, these can be 2 to 3 year stints, and there's an enormous amount of business value, enterprise value that a board member can offer. And I would really match where you're looking to go with who you have on the board, because the board should be an accelerant to the business, never a drag.
Wonderful. Great insights there for us. I'm glad we posed the question to you. Wonderful content. Thank you. We like to ask our guests to reflect a little on the personal side with us. We're wondering, you've been there 6 months. Maybe your colleagues don't know everything about you. Is there something from your past, an interest, a pursuit, a hobby, a chapter of, I don't know, it doesn't have to be athletic, but it might be just something you won? I don't know. Anything come to mind? What would you share with us? Something from the personal side. People don't know about you.
Yeah. I'm not sure how many folks and this might sound ironic, because I work for a charitable company. But I mean, I'm not training, and so many folks in charitable company have all 7 continents, which is pretty unique. And so I think now, family 3 young kids. But before 3 young kids, there's a fair bit of travel around the world. And I myself was born in the Soviet Union in Ukraine and immigrated through Italy and grew up in Kansas City. So travel and being in different places has always been part of my life. But going to new places and meeting new people and just seeing how life is elsewhere is probably the lifelong passion that I have. That I probably didn't get a chance to share much of in our company, as we're quite busy with that long list of things to do, as you mentioned, that CFOs have.
Yeah, nice detail there for us, though. What about a book or a resource? Is there something that's influenced your thinking, or is it just maybe you read to escape? I don't know, but something you'd recommend. Doesn't have to be a business book.
Yeah. I think one book that we quote a lot in our business, and I've read last summer, that I kind of still have on my shelf and I reference to sometimes, is the Reed Hastings book, the Netflix founder, No Rules Rules.
Yeah.
I think for growth companies that want to have an experimentation mindset and to really maximize the opportunity and the output of every employee, that's a good book to refer to. It works for their business perfectly. It's never going to be a perfect fit for everyone. But I think if there are a lot of principles there that we look to embody that allow us to test a lot of things, to give people freedom and responsibility, to be able to maybe grow faster as individuals in their roles and their seats and have more impact. I think that's a great one. Just to take a look at it.
Yeah, nice selection for us. Thank you for that. We're up to our final question, Alex, and this is where we're going to ask you to look forward, and we're interested in your priorities as a CFO for the coming 12 months. What would those be?
Yeah. First and foremost, it's making sure that the business and how we allocate capital is focused on our SMB customer. As I mentioned, we have over 25,000 customers, predominantly in the U.S. There are over 33 million SMBs in the U.S., and the great majority of them don't use a travel platform when they're booking, managing, or paying for their platform. And so making sure we're leaning into that underserved market, we're eliminating the friction that they have and making their lives a little bit easier is our core priority. We're actually, as part of that, we're releasing a charge card in 2 weeks, where businesses will be able to now have one card that they can use as a travel card, that they can seamlessly book hotels, flights, and all their off-platform expenses like meals and rideshare and last-minute office supplies. We think that'll be much easier, right? Eliminate the expense reports, eliminate the friction, create more rewards, create more value. And we've talked a lot about the SMB. The other side of our business that I can't forget are our strategic partners on the travel side, right? The airlines, the hotels, the rental car companies. And so we actually last week released a product to help with meeting rooms called Spaces. There's tens of thousands of empty meeting rooms in hotels. Think about the small room in most of the hotels that you've checked in. There's a number of them, and they're usually left for the customers are in the hotel. But now, given remote work and given how folks are coming back together and having on-site workshops and meetups, you can now easily go and to engine.com and book a space. And that offers pretty incredible value because it was dormant inventory to a lot of our hotel partners that sometimes it was, but sometimes it wasn't really getting all the time and attention. So we're constantly thinking about how can we connect our demand and our supply side together and find different opportunities where it's a win-win for everyone. And again, with that SMB customer in mind. The second thing, and in more of the financially minded answer, is getting better telemetry on incrementality. As I talked about earlier, it's aligning everyone. If we had an extra $1,000, here's where there's the highest ROI, and we have a number of go-to-market channels with inbound and outbound and partnerships. By having all of us kind of reading off the same script and aligned with here's how my domain can impact the business, and here's where I can become more efficient. I think incrementality helps folks align on that, and it kind of goes to the ultimate principle of optimizing capital allocation. And the last thing, as an organization, we've done a great job, I think, building momentum and early wins. But brand awareness for us is actually still pretty limited. And as an entire executive team, we're focused on increasing that because it helps with our talent and finding new great hires. It helps with customers who lots of times, if they don't know who you are, they're less likely to pick up the phone or answer the email. And it helps with all of our suppliers who realize that we're making customers' lives easier, and they'd want to be part of our platform, part of our ecosystem to bring more value to our SMBs.
Alex Melamud, thank you for joining us on CFO Thought Leader.
Thanks, Jack. Pleasure to be here.